From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Well, hello, and welcome to the COB. I'm Nadine Blaney.
And I'm Juliette Sarli. As we continue to test these records, Nadine, we did get to 81.50 at one point during the day's trade on the ASX 200, but of course we are waiting patiently to see if we're going to break through and test these records on the close, which doesn't look like we've made just today.
No, so this is the CIBO Australia Index, up by 0.3%. The S&P ASX 200 is moving in tandem with that on this, the 17th of September, ahead of an FOMC meeting, ahead of the BOE, ahead of the Norges Bank, ahead of jobs here in Australia, and then of course, hard to believe, our own RBA meeting next week.
I know, the 24th. I just RSVP'd to the media conference, but it is obviously not as regular as it used to be, so that's putting us out of whack a little bit as well. All right, so as we say, it looks like we're just shy of the record on the ASX 200, but testing these records today on the overall market, and some pretty good gains coming through across most of the sectors. You hear a little bit of a dip out of gold, but that was to be expected.
Yeah, I mean, you can't just travel in one way direction, although you did your best inspiring gold with your outfit today. Looks lovely, Juliette. Look, I had a good chat just now with a bloke from Infinity Asset Management, just talking about, the warm, just the momentum that this market seems to have right now. Even though plenty had expected to see a bit of a pullback in the local market, seems to be going from strength to strength. Something that Dawsey was kind of talking to me about as well, Adam Dawes from Shaw Partners. Those interviews will be up online shortly.
And Chris Weston spoke about that same theme with me this morning today as well, just basically saying it'd be great if you are set to retire when you've got your money linked into the share market and the super I should say, as it continues to rise. All right, so we're continuing to look at M&A as well, and Xero sifting through deals here with this deal for Syft. The actual details, I think.
Syft Advisory, $17 million. Again, Adam Dawes from Shaw Partners weighed in on that one. He says it looks like it's a good buy, and if the share price reaction is reflective of that today, it would seem as if market participants are agreeing with that one.
And cut consensus. Finally, of course, the Fed meeting upon us. Will it be 25? Will it be 50? Again, a good chat with Chris Weston saying it doesn't matter what the cut is. It depends on what the language is and how Jay Powell, I guess, validates what their decision is.
Yeah, so Matt Richardson from OFX, all of these interviews up online was saying same thing. 25.50 right now doesn't matter as much as what Jay Powell says, whether or not this is front loading, this is an aggressive start, or whether it's a harbinger of what's to come. So we are watching currency markets with a lot of interest, and that is along those lines for our expert guest, Sean Callow, independent currency strategist, will be joining us in just a tick.
Yeah, first let's go through the sectors as we await, of course, interest rate cuts and interest rate sensitive moves. The REITs here, mostly higher today. Centre having a good day, up by 1.4%.
Still some energy, excuse the pun, coming in terms of oil, the oil price lifting, supply side concerns. Look, this isn't kicking it out of the ballpark, and in fact, over the past hour, Beach Energy has come off slightly, but still positivity being expressed in some of these energy names.
Yeah, and then having a look at tech, we mentioned the Xero acquisition or play, up 2.6%. Why is tech coming off? But it has been hitting these records and is still very much ahead of most broker price targets already at that 132 near mark. Next, you see a little weaker, Tech One and Zip having a good day.
Gold on that thematic. Regis Resources as the standout here. Newmont coming off by about 1.6%.
And let's get into some of the stories. I mean, Star Entertainment, we're waiting to watch whether it's going to start trading, but of course it does look like it could be bailed out by its lenders. This is this 5-point plan to give it a chance to turn around and see whether it really is fit to hold this Sydney license.
It's been in a trading halt for going on 2 weeks now, more than that. So pretty incredible there. We talked about Xero and that Syft Analytics acquisition for $70 million. This is an interesting one. So this is a thematic that I spoke with Ben Gilbert from Jarden about. He named Webjet, as one of his preferred picks in the travel space. It's voted to demerge its company into 2 separate ASX-listed entities. You can find that interview with Ben Gilbert either on my LinkedIn or via the website. So he talks about the strategic shifts that came to the fore through this reporting season for a lot of those consumer-related stocks. So pretty interesting stuff.
Yeah, and a bid for Pacific Smiles from Genesis Capital. I think we should get into our guest, though, do you think?
If he's there. Oh, one other thing that you should note is that bid from Regal being confirmed for Platinum. So that was a pretty big move. Regal is on the hunt, and Platinum, of course, has been underperforming. So that is one to watch. Now we can get to our guest.
Let's get to our guest, and welcome to the COB, Sean Callow. And Sean, of course, as we're patiently awaiting the Fed, some big moves, as Nadine alluded to, in currencies.
Yeah, no, look, it's really all down to the Fed on the day, and I think particularly for dollar yen is the one to watch the most, that it's tested about 18-month lows, I think it was, just yesterday, so around that 140 area. So much at stake, and I do believe it does matter 25 versus 50, at least for the short term. So big picture, okay, maybe it doesn't matter that much for the economy, but there could be some really messy price action, particularly in that period from the announcement at 2 p.m., the press conference, and absorbing all those details, quarterly forecast and headlines and so on there. It's certainly likely to be a lively session. So I think it really gets down to whether you believe that some of these press stories leaning to suggest arguing 450 rather than 25 over the past few days are actual leaks from the Fed, or whether they are just writers looking for an audience and giving their views. So it will be very interesting to see.
Yeah, I think it's incredible, because when I was on air this time yesterday, it was sort of like, why did the shift happen so quickly to the 60% chance for a 50 basis point cut, not sort of realizing that it was off the back of that. Although overnight, I will note that the former president of the New York Fed, Bill Dudley, was saying that the logic supporting a 50 basis point cut remains compelling, or is compelling. What's your view? From everything that you've studied, from everything that you've read, all the commentary, of course, the Fed current members are in a blackout period. Is Jerome Powell and the FOMC likely to front load these interest rate cuts?
Yeah, well, that is, I can definitely appreciate those arguments. And I think particularly the fact that they flagged it so early from Jackson Hole, it was looking pretty likely already, but formally pretty much just saying, okay, we're ready to lower rates. The argument 450 is particularly while you're so far away from neutral, and inflation is falling, and therefore real interest rates are effectively rising, you're tightening, then the argument for 50 is to go now. But I'm still probably leaning a little bit more towards 25, particularly because they could just go 25 at each meeting. I think it's very difficult to skip a meeting, so to have a 50 and then maybe a 25, and maybe they skip one around the election or whatever. I think it's much better if they just go the 25s. But as other guests have been saying, by the sound of it, there's so much that Jay Powell can say in the press conference to tilt it one way or the other, that the actual market reaction and the pricing, particularly the rates market pricing, can be easily tweaked by what he has to say.
Yeah, it is all about the dialogue, as we've been mentioning, how he is going to justify, validate whatever decision they make. And that points us to what we're going to hear from Michelle Bullock next week as well, particularly as we get our jobs data this week. Amidst as well, and I've gone to quite a few of the last press conferences, a lot of people calling out, is she making a policy mistake by being so steadfast in saying that they are not looking to cut?
Yeah, that's maybe that's your question, right? You can't ask
I've already asked
making
it
a policy mistake.
So.
Oh, you already tried. Yeah, okay, it was worth a try. But yeah, look, I think they've pushed back on it. Obviously, it's very clear that we got the message that at the last meeting, on the information they had and their projections, they didn't see that there was that it was likely that they would cut rates in near term, and then Michelle Bullock was willing to say near term, meaning into the end of the year. So it really gets down to that Q3 CPI due in late October, I think. But it is you can certainly make the case that they are keeping the policy too tight, because they really are. We've got it. The economy is only growing at 1% as it is. per capita, we're really being squeezed. 6 consecutive quarters of contraction in per capita GDP. You do just wonder how much further a bank that is supposed to have a dual mandate on inflation and full employment is really, what sort of balance are they achieving if they're looking to hurt demand, crush demand even further, I suppose. So yes, I think that question will linger. I don't think there's any reason to suspect we will get some sort of really big surprise, particularly at this meeting, which doesn't provide updated forecasts. So once again, look, the RBA had a chance to move their meeting away from when they were doing the new timetable. They could move it away from Melbourne Cup Day, but here we go again. That's still looking like the most important meeting before year end.
God, 1 year I'm going to get to go to Melbourne Cup celebrations, I'm sure. Now, Sean, well, we can continue to talk about the dollar yen, the FOMC, but I thought maybe just to get your thoughts on support and resistance when it comes to the Aussie dollar, even if we do see sort of fireworks and a lot of movement around the FOMC, where should the Aussie be comfortably sitting in your view, especially considering, we've got still a weak pulse coming from China?
Yeah, and I think that's the big problem. So I think as soon as we start to get into that low 68 area on Aussie, it's really getting a bit overdone potentially, and you will get those sellers back to knock it down, because we just need better news from China to really change the narrative there, because you can construct a bullish narrative for the Aussie 69, 70, perhaps over the next few months, on the basis of a steady RBA versus steady rate cuts from the Fed. But the China story just seems to cap rallies each time. We got some pretty soft numbers over the weekend in terms of the August activity data. So that's a concern. But once we start getting down towards the 60, high 65, 66 area, then there seems to be enough interest, at least against the US dollar. The Fed is undermining the US dollar sufficiently that we probably can see buyers emerge under 66.
All right, Sean, thank you as always for joining us. Sean Callow, their independent economist. The stock of the day today, we were talking about this before, it was Platinum Asset Management. Koshy was joined by Scott Phillips from the Motley Fool and Mark Moreland from Team Invest.
So I gotta say, I find this one really, really interesting. For Platinum shareholders, look, this is a 14 odd times earnings business. It's been reasonably disappointing over the longer period. I guess not so much all the way back to the 90s, as you say, mate, but the last 5 or 10 years have been reasonably ordinary for Platinum shareholders. End of the day, would you take the money or don't you? I guess you probably do. This does seem like something of an end game for Platinum. Whether it does survive this one or not will probably come down to either another bidder or simply saying no and hoping that they can make their own way. As I said, I'd rather be the seller than the buyer. If I was Platinum, I'd probably take the money.
I don't understand why they would want to buy it, but anyway, look, I would take the money now.
Right.
Well, on this 12% lift and say thank you.
Not wait for the takeover and go into Regal, just take the cash.
You can speculate on all that, but I wouldn't want to have Regal shares.
Right.
If you look at Platinum going forward, we're showing their forward return negative 15% a year, and Regal we're showing negative 41.
Right.
In other words, they're both shocking.
Right.
Regal's more shocking.
He does have a way with words, doesn't he? That Mark Moreland from Team Invest. So that is a sell recommendation from both of our guests. However, if you'd like to hear their extended explanation, you just need to go to the website where we have all of our stock of the days archived, as well as our YouTube channel if you are so inclined.
And the podcast as well. So many different ways to listen. All right, let's get to the leaders and laggards in today's trade. When we tried to hit a new record, Polynovo up by more than 5%. Centuria Capital and Sayona Mining and Pro Medicus also looking good.
Yeah, no news really associated with that. I'm flipping the page though, and it's earlier it was a resources story mostly, and yeah, same goes now. So Core, Liontown Resources, Genesis, Boss Energy, and then the outlier, which is Helios. Again, no news.
All right, in the small end of town, Tribune, it's interesting Platinum didn't get on that board. Wasn't it 12% higher?
Anyway.
And
Appen up by about 8%. It's an interesting one in the tech space. Now flipping the page, And let's see what we've got here in the laggards. We've got Telix, Brockman Mining, and Pan Continental Energy. Those are percentage point moves. Some of them are very small stocks, as you can see on your screen.
Yes. Okay. Well, tonight, of course, we are looking forward to retail sales, which another really interesting thing that Chris Weston said to me this morning, if you were not having the Fed meeting this week, that would be the most important thing. It's always a bit of a caveat, isn't it? Because obviously the Fed is meeting, but saying this is a really crucial read. We've also got industrial production, business inventories, and a read on the housing market as well with the NAHB index.
Yeah, looking forward to that. Westpac is calling for, well, I guess consensus is for a pullback of 0.2% in that retail sales data in the United States. Tomorrow, we get a speech by Assistant Governor Brad Jones. Don't know what that's about, should have looked. We get the Melbourne Institute Lending Index, and Chinese markets come back online. And again, we have a number of these Aussie companies trading ex-dividend, including Auckland Airport, Flight Centre, and Supply Network.
He's talking at the Intersect Festival in Melbourne, which is sect with a K. I don't know what that's about, but just talking about the financial system.
Yeah. Okay, all right. Well, we'll keep an ear and an eye out for that. We'll keep an eye out for this local market finish with the S&P ASX 200 ending higher. So let's focus on that. Not quite at a record high, sitting at 8,141, so 9 points, roughly speaking, below that intraday high set today.
All right, and as we mentioned, some good gains coming through from Polynovo, Centuria, and just looking at the sectors as well, pretty green across the screen really, just telco and consumer staples coming under pressure. We will do it all again tomorrow from 9:45 Eastern.
See you then.